please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, good afternoon. Welcome to Midcap Radar. I'm Sonia Shenoy and with me is Reema Tendulkar. It looks like it's a day of consolidation when all this market wants to do is hold on to its gains from the last few days. But what you are seeing in the midcap space, although the headline index is under pressure, the market breadth is also quite weak. So there's definitely a wave of profit taking that you're seeing in the midcap end of trade. Hi Reema.
Hi Sonia, and in the frontline end, it's TCS which is holding forth, so now higher by close to about 6% If you pull up the contribution play, TCS is contributing close to about 30 points on the Nifty. So if it wasn't for TCS, the markets would be in the red. That said, it's still a major outperformance compared to the rest of the global markets. So Hang Seng in the Asian markets is down close to about 400 points, and Europe too is reeling with cuts of close to about 1%. But let's drill it down then to the top headlines that we're tracking this afternoon. Global jitters prevail over domestic cues. The market recovers from day's low. Banking, financial and metal stocks drag. The mid-cap index underperforms.
The TCS stock spikes up on the back of a 15-quarter high constant currency growth in the first quarter of FY19. The management tells CNBC TV 18 that better days are ahead for the company.
Metal stocks take a pounding in trade after US President Donald Trump threatens an additional $200 billion worth of tariffs on Chinese goods, including steel and aluminum products. A stronger dollar adds to global metal woes.
And on the back of the strong first quarter earnings, Ramesh Sopti of IndusInd Bank tells CNBC TV 18 that the bank aims to sustain a bottom line growth of 25% by 2020.
Founder of Shriram Group, R. Tyagarajan, confirms CNBC TV 18 News Break that the group is considering a possibility of a merger of the NBFCs into Shriram Capital as a single listed entity. However, he clarifies that nothing has been finalized yet. All right, let's get Ashwani Gujral and get a sense on what's happening across the markets. Ashwani, when we last spoke to you, you said perhaps the banking stocks are showing you some downward momentum and it makes sense to exit their long positions. What's the call now at 1:30?
See, with the caveat that we should not take this Nifty rally on face value, because if one stock is skewing it so much, it's not giving you the true picture of the market. The other issue is that we are sitting at 10,950. So, it's not exactly after a great downside. And if this, uncertainty lingers on, then there are good odds that people who are long, the long positions will leave the, people will leave the long positions and the market is likely to come off. So I don't really have a view on the Nifty because till things stabilize on IT, it's tough to say where it's going. But I think banks are have developed significant weakness, and even now I would probably take short positions on the bank Nifty. I think yesterday's high should be a fairly decent stop here. My sense is that we should again get into a 200-300 point range, and possibly more downside could happen in the days to come.
Okay, more
individual stocks. Sure. Hindalco is a sell with a stop of 225, target of 210. UPL is a sell with a stop of 616, target of 590. And Godrej Consumer is a buy with a stop of 1295, target of 1360.
In fact, Godrej Consumer is a big mover today. It's hit a new high. It's up almost about 5% And now with this, the gains on Godrej Consumer through the year have been almost 32%. So a massive wealth creator there. Ashwani, hi afternoon. I also wanted your thoughts on TCS. Post this 6% rally that we've already seen on TCS, is there scope to make more? Any fresh positions that you would advise here on the upside?
See, obviously the rally hasn't started today. Again, always not a good idea to buy good news. It should cool off. Possibly it will move higher in the long run. But I think this is probably closer to an intermediate high, given the way global markets are kind of shaping up. So possibly don't buy into it, but if you hold it, I think it's a fairly decent hold.
Okay, it's a fairly decent hold for sure, and it's been a big multi-bagger in the past. So let's listen into what the management had to say. They spoke about the growth, especially in the BFSI vertical. Of course, that constant currency growth of 4.1% blew everyone's mind away. So let's listen in. Rima caught up with the management to get a deeper insight on the company's Q1 performance. Listen into what they had to say.
We've been focused on trying to get back to the double-digit trajectory. Still a tad short of that, but we have the momentum, and most importantly, the broad-based growth coming across all segments, especially the turnaround that we're seeing in both BFSI as well as North America, is giving us a lot of confidence that we should be able to get there.
BFSI has grown by about 3.7%, excluding the platforms things, and if you include the platforms, then overall BFSI has turned around, and we are growing at about 5.6%. And the deal pipeline is good, and the bookings that we have made during this quarter is very nice, and it is very broad-based, and specifically more than about $1 billion plus of deal booking has happened in the BFSI segment.
Digital is now becoming integrated into more complex contracts. So the breakout of it is more in terms of the services that we deliver. But at a contract level, it is not as if it's a digital contract versus a non-digital contract. But the scope of work is significantly increasing, and it is becoming more core of what we're doing. Last year we grew at 30% plus. Definitely this year also in digital, we should be well on our way to achieve better than 30%.
I think you are well poised to get to that from various aspects. Definitely BFSI and retail, where we were seeing quite a bit of muted growth in the last couple of years. We are seeing that coming back. And also all the other verticals are doing well. Definitely this is clients are very clearly, our business 4.0 framework is resonating very well with our clients. And with the significant digital, the opportunities which throw up, I think we are well poised for that.
Mind-blowing rally, 6% now. Its market capitalization is at 7.6 lakh crore. It's a 47% rally in 2018, and it's now trading at a more than 30% premium to that of its closest peer, Infosys. But let's stick with earnings now. IndusInd Bank has also posted a largely in-line set of earnings. We spoke to the company's MD and CEO, Romesh Sopti, about the company's performance. He said he's hoping to sustain the bottom line growth of 25% by March 2020. Listen in.
I think cost of money has risen and will remain elevated. There's no doubt about that. This quarter one, although loan growth was 4%, the NII growth was 6%, so the catch-up is happening. So there's a repricing of the loan book that is already happening. So I think we will remain in this range of that 3.9 to 4% range, which has always been aspirational for us. Our portfolio has always been cherry-picked. And even after cherry-picking and the retail part showing robustness, we'll probably be anywhere between 25 and 30%. I think that's a sustainable growth for us. Our sites are limited to 3 years at a time. This 3-year cycle ends with March 2020. By March 2020, we hope to sustain our bottom line growth of 25%. Our loan book growth, we always said, will be in that range of 25 to 30%, etc.
A couple of these NBFCs like Equitas and Ujjivan are moving quite well. So Equitas has seen an up move of close to about 2.5%, Ujjivan too rising. And keep your eye on a few of these mid-cap pharma names as well. So Divi's Laboratory, Torrent Pharma, Aurobindo Pharma too are managing to move up. The company joining us next is Action Construction A. Saurabh Agarwal, the executive director of the company, joins in now. The stock is higher by close to about 5% today. It's not done anything in 2018, but in the last 1 year, the stock has actually doubled. Mr. Agarwal, afternoon, and thanks so much for joining in. We've seen an increase in commodity prices. Is that going to impact the company's margins in the coming quarter as well as year?
Yeah, good afternoon. Yes, there has been a drastic increase.
Mr. Agarwal? Okay, we'll try and reconnect back with ACE. There seems to be a bit of an audio issue, but let's just quickly run through what's happening on the mid-cap end of trade. Adani Group stocks continue to be the big winners. So now Adani Power has a gain of close to about 15%, while Adani Enterprises has rallied nearly 9%. It's a fresh 52-week high for Godrej Consumer. Tata Elxsi continues to move up quite smartly. IDBI Bank has seen a rally of nearly 17% in this week itself on hopes of an open offer by LIC. But we've managed to reconnect with Saurabh Agarwal of ACE. Agarwal, my previous question was that we've seen commodity prices move up. Should we expect a negative impact on the company's margins in Q1 and FY19?
Yes, the commodity prices have really played havoc in the recent past. Most of the steel pricing we've been able to pass on to the customers, but yes, there is a lag in terms of, we want to pass on more with respect to our price increasing to the customers. So we really don't expect any margin expansion in the quarter which has gone by. But yes, going forward, we should be looking at expansion in margins as well. But yes, Q1 will be under pressure.
Okay, Q1 will be under pressure. Saurabh, hi, good afternoon. We were speaking with the head of IndusInd Bank a while back on our channel, and he did indicate that the financing for construction equipment has gone up substantially over the last 6 months or so. Are you noticing increased orders? I mean, you are sitting with a growth of almost 40% in your revenues as of FY18. What do you think a sustainable run rate could be in FY19?
Yeah, last year was pretty healthy. We were able to grow at nearly about 45% on the top line. And going forward, a 30-35% looks like an easy task, and but things are looking much better than that, to be very frank with you.
Okay. Has there been an improvement in your construction equipment capacity utilization? I think the last time we spoke, it was quite low at 30 to 35%.
Yes, as of now, for our cranes business, which also contributes about 68% to our revenue, we are about 80% utilized, and we are already doing a small amount of capex to spruce up our capacity, around September, October. But yes, our other businesses like metal handling, construction equipment, and agri, we do have capacities available. We are working anywhere between 30 to 50% in these product lines.
Okay, so you said metal handling, construction equipment and agri. Can you give us a little more color on where the growth is coming in from? Are you seeing increased orders coming in from the agri segment? And what is the order book currently?
Yeah, see, we have been seeing a constant increase in orders all across our segments and also in tractors. So I'll just spread it out segment-wise. So in cranes, we are looking at about a 50% increase with respect to order book. And something similar we are looking in construction. Construction is rather a little better than cranes. Even for forklifts, we are looking at a 30-40% increase in orders. And for tractors, currently we are looking at about a 20-25% increase with respect to, over the business that we're doing and the orders that are coming in.
Okay, so why, despite an increase of 30-40% in your construction equipment segment like forklifts, etc., is your capacity utilization just at 30 to 50%?
Yeah, but let's say if we talk specific of metal handling, we have already reached about 50% there. And for agri, we are again at 50%. For construction equipment, yes, we are at about 30-40% because we had built up a lot of capacity which remained unutilized.
Okay.
And yes, now this year we should be seeing much better output from that facility, and hopefully the utilization levels will go up to 60, 70 or even more, yes.
In agri equipments, I just wanted your thoughts on whether the pickup is coming largely from tractors, or are you also seeing a lot of improvement as far as farm mechanization is concerned, so transplanters, harvesters, etc. Because that's the feedback that we got from the likes of Mahindra and Mahindra, that you're seeing now an increased demand coming from transplanters, harvesters, etc. Do you guys do that as well, and is there increasing demand there?
We are primarily into tractors, harvesters and rotavators, which we started manufacturing, I think, only about a year back.
Okay.
And definitely mechanization is also playing a role because all said and done, labor here and there is becoming very expensive. And the fact is now it is practically not available. Not only in agri, I feel even in the industry there's a labor shortage as of now, yes.
Okay. You indicated that in cranes, the company is operating at close to about 80% capacity utilization. Your order book could go up by nearly 50%. But you also said there is a capex, or you're looking to increase the capacity there. If you could elaborate a little more on that, and how much can this increased capacity contribute to your revenues?
Yeah, this capex we started doing only last month, and we are very hopeful that we should be able to finish it around September, October. And we will be able to increase our capacity by about 40 to 50%, owing to the increase that we are creating for our fabrication setup and assembly setups. And we'll be spending close to about somewhere between 15 to 20 crores on a deferred type of scenario over the next 3-4 months, which is happening already. So we should be able to increase our capacity by around 50%.
And what does that mean in terms of revenues?
In terms of revenue, that would translate into about 400 to 500 crores for cranes.
400 to 500 crores for cranes. Just one final question then. Will any of these increased orders come with increased margins as well? Because although your revenues have been growing well, your margins have been stuck around this 10% range. Should we expect a better performance, or will it sort of, the cap be on this 10% because of higher commodity costs?
See, as of now, I would say, yes, we are stuck at around 10%. Definitely our average selling prices and realizations are becoming better and have become better in the last 6 months, 9 months. But unfortunately, the commodity price, like I said, especially steel, has run up so fast that as of now, yes, we should be looking at a 10%, maybe 11%. Yeah, but the good side is that we have some indications that steel prices are bound to rationalize a little, owing to the steel prices have already started reversing in China. So that is going to, affect our country as well, hopefully in the next 1 or 2 months. If that starts to happen, then yes, the margin expansion will be faster.
All right, Mr. Agarwal, we leave it at that. Thanks so much for joining in. So that is Action Construction Equipment.
You're still watching Midcap Radar on CNBC TV 18. The Midcap's actually falling some more, so don't lose sight of that. In the last 1 hour, you've seen a lot of these stocks come under pressure, especially from the banking space. Andhra Bank fell about 1.5% in the last 1 hour. Bank of Baroda is down, PNB. So it seems like people are just shedding their positions in the mid-cap banking space. And a couple of these oil marketing companies, which have been huge losers this year, have fallen some more today. So IOC has fallen 2% just in the last 1 hour, and volumes have piled up. Look at the chart of HPCL dragging its feet there, down about 3.5%. But Sonal is here. She'll tell us about a whole host of stocks that are buzzing in trade and the news flow behind it. Sonal, over to you.
Thanks a lot for that, Sonia. I'll start with India Bulls Housing Finance. Well, the company has redeemed NCDs worth 160 crore rupees. Also, these NCD redemption is likely on the back of mutual fund debt redemption. These redeemed NCDs were issued back in 2017 in March. Also, new NCDs will be of higher cost versus the lower cost NCDs that we are seeing right now. Other stock that is in focus is MBL Infra, because the company has issued some shares to promoters on a preferential basis, and post this issue, the promoter shareholding has risen to 68.5%. That stock is in focus today. Shalimar Paints also has proposed rights issues of around 240 crores. Also, there is a re-establishment of the Nasik plant, and they've also established a new regional hub out there, so that stock is in focus. PNB Housing has finally received an intimation regarding 51% stake sale by PNB and Carlyle. The other stock that is in focus is MCX, because there are reports which are suggesting that MCX and NSE may team up for a bigger exchange traded action. So that stock is buzzing in trade today. However, these are just reports and we have not independently verified them. Back to you.
All right, and Coal India is the top Nifty loser as the company begins investor roadshows for the government share sale. But let's get you a CNBC TV 18 exclusive. The oil to oats maker Marico is positive about growth in the consumer goods industry in FY19. Speaking exclusively to CNBC TV 18's Priya Shade, Marico CEO Saugata Gupta says he expects the good monsoon to boost rural consumption and expects the momentum to pick up in the next few quarters.
For any big transformational movements, I think there are hiccups. GST is extremely good for the long run. It is good for the country, I think, and I think the government will drive long-term compliance, which will lead to far better tax collection. At the same time, I think it has also helped in terms of supply chain effectiveness, in terms of ease of doing business. At the same time, I think the government has been responsive to some of the hiccups and some of the execution issues. It will get sorted out. I think the issue is that, and also the fact that they took that input in terms of some of the rates that got reduced. So I think over the long term, it is very, very good for the country. It's very, very good for the economy. But as I said, that I think there were short-term hiccups which are being tackled.
What about rural demand? We've seen good monsoons playing out so far. What is your assessment of when rural demand will pick up? Do you think it is back to historical levels?
If you look at the last couple of quarters, we have been seeing the first green shoots on rural demand. Fortunately for us, the monsoon is good. I think the government has taken a significant amount of steps to boost rural income, things like direct benefit transfer, and I have no doubt that we will see a boost in the rural income and therefore rural consumption over the next couple of quarters.
As far as the foods portfolio is concerned, that there are a couple of healthy alternatives when we talk about what Marico is doing and in between snacks that your company is working on. Going forward, can we expect some more launches in the healthy space catering to what the FSSAI has just announced?
So the way we look at it is, and I think we are definitely, our objective is to drive healthy eating and healthy in between meals and breakfast. I think we already have the oats portfolio which is doing well. We are just prototyping soups in Mumbai, and over the next 1 year we would looking at I think some more alternatives we want to prototype. We definitely want to have a much bigger play in healthy foods over the next 5 years.
Is there an estimate as to how much healthy foods will contribute to the overall portfolio, maybe in the next 3 to 5 years?
I think we'll come to that. I think our entire effort first is to ensure that we get a critical mass in whatever we have. I think focus is very, very important for us. So we already have the oats portfolio. We are prototyping soups, and maybe over the next 12 months we will also prototype some more offerings.
Okay, that's Marico, a stock that has delivered great returns in this year. But as we wrap up on Midcap Radar, we will leave you with some market opinion. We spoke with Pratik Gupta, the head of equities at Deutsche Bank India, on the road ahead for the Indian markets and the sectors that he likes. In fact, he also gave us a nifty target for the end of the year. So listen in, your stocks will take all the action forward.
A structural long-term story on a 3 to 5 year story, that stays very good. The main driver behind that is we've finally, after many, many years, we're beginning to see corporate earnings growth picking up. Our viewers at Deutsche is we are expecting the nifty earnings growth to be about 20% for this year. And this should continue into next year as well. Sensex is 37,000, Nifty is about 11,400. So which is only a marginal upside from here. So which is why from here on, it's you got to be very, very careful about which sectors and which sort of stocks you get into. Our preference at the start of this year, since the start of the year, has been to prefer IT services versus pharmaceuticals amongst the exporters, and that call has played out. Even from here, I think that call stays. However, our preference would be for companies which have large exposure to the US, relatively larger exposure to the US, and secondly to BFSI. These are the two segments where we see relatively better growth prospects and where you could see potential earning surprises coming through. So within the sector also, you've got to be a bit more stock specific. But broadly speaking, yes, we'd focus on the BFSI and the US exposed companies.